The Indian oil industry can get complex. What prompts the price change? How does it impact your petrol prices? What moves the stock prices? And above all, how do you track it? Well, stick till the end as I break it down for you in the most easiest way. Now, the most important aspect to track is Brent crude oil. This oil is a type of light, sweet crude oil that serves as a global benchmark for pricing oil. Brent crude is extracted from the North Sea and is widely used in refining to produce products like gasoline, diesel fuel, and other petroleum products. The price of Brent crude are valued in US dollars per barrel of oil. Now, what causes the prices to change? Well, Brent crude prices are impacted by various factors like the global supply, the demand, as well as geopolitical aspects. Any signs of instability in oil-producing regions or demand concerns from key importing countries like China and US have an impact on Brent crude prices. Now, Brent crude prices has seen a negative trajectory so far this year. Prices are down over 17% in the past 1 year and have fallen over 17% since the start of July 2024 itself. This decline of oil prices has a different impact on the Indian oil industry, which can mainly be broken down into two sectors, the downstream and the upstream. The downstream sector includes companies that operate the petrol pumps you use on a daily basis, such as Indian Oil, Hindustan Petroleum, and Bharat Petroleum. These companies mainly have two business segments. The refinery segment involves the process of turning crude oil into a range of petroleum products like petrol, diesel, kerosene, jet fuel, and petrochemicals. The marketing segment, on the other hand, involves the sale and delivery of these refined products to end users. This is done via retail outlets as well as bulk deliveries to industrial customers. Now, due to these business operations, the downstream companies are also called refineries and OMCs, which stands short for oil marketing companies. Now, as we all know, currently petrol and diesel retail prices are fixed at the pump, and these have remained unchanged since the past 28 months now. This makes the marketing side of earnings of these companies directly linked to the change in oil prices and margins of their refinery segment. In this case, a drop in Brent prices is positive for Indian Oil, Bharat Petroleum, and Hindustan Petroleum. Why? Well, OMCs purchase crude oil in the international market and then refine it into products like petrol and diesel. Thus, when Brent crude prices drop, so does their input cost. This helps improve profitability in the refining and thereby the marketing segment. This benefit is also visible in the marketing margins data provided by MK Research. Well, as per the brokerage, marketing margins of the OMCs on petrol and diesel in Q1 FY25 ranged around 3.8 to 4.3 rupees per litre. This currently stands around 13 to 14 rupees per litre. Furthermore, MK also knows that Hindustan Petroleum is the biggest beneficiary of a drop in oil prices since the company markets more products than it refines. Well, now let's address the upstream sector of the Indian oil industry. Now, this includes companies like Oil India and ONGC, which are involved in the exploration, development, and production of crude oil and natural gas. A drop in crude prices stand negatively for these companies since it reduces the revenue potential for the firms. Now, currently, companies like Oil India and ONGC are kind of facing a no-win dilemma. This is because of the windfall taxes that the government imposes on the companies when Brent prices stand high. Coming back, windfall taxes limit the amount of revenue Indian upstream companies earn when they sell a barrel of oil to $75. So when prices slip below the $75 mark, which they did on September 3rd, 2024, the companies face more risk to their earnings since the market price of oil is now lower than an already restricted maximum revenue potential. Well, let us know what you want us to dissect next in the industry in the comments below, and stay tuned to NDTV Profit.